Hey, best ever listeners. Welcome to Unlimited Capital on the Best Ever CRE Network. I'm your host, Richard McGurr. Today, I had a really incredible conversation with Ash Patel of Beyond Multifamily Investing. The reason I love this is that thus far on this show, we've only talked to what I would call like professional capital raisers or people in an organization where their job is raising capital and they like view themselves as sales and marketing people. Now, that said, I know that a ton of you best ever listeners out there are the operators. And in fact, like we couldn't do it. Not only could us capital raisers not do it without you guys, but you guys need the capital too. And I'm sure that a reason that a lot of you are listening to this show is because you're like, how do I raise more capital? How do I become a capital raiser? How do I learn sales and marketing? And so I think the perspective of someone like Ash Patel, who spent years doing deals with his own money and then finally made the switch to like raising other people's money and being able to do larger deals, and that never looked back and said, I should have started doing this earlier, is we talked a lot about the mindset that you need to adopt, how to use your skills and as an operator and what you do to inform your sales and marketing and capital raising, how to stand out on LinkedIn. I mean, I think this is one of the best interviews that I've done so far. It was really a pleasure, and I hope you guys enjoy. Ash Patel, welcome to the show. It's truly an honor to have you on.
Richard, I'm looking forward to this, man. Let's get started.
Yeah, let's do it. So you built a significant commercial real estate portfolio using a lot of your own money, but also a lot of other people's money. So many of the guests that we bring on are what I would call professional capital raisers, whether they're an independent fund of funds manager like myself, or they're the capital raising partner in a larger organization. But you've started as an operator, and I would say you're primarily an operator. So how do you balance deal execution with the capital raising part of your job?
Can I give you the backstory?
Yeah, I'd love it.
All right. So for 10 years, I only used my own money. And because of that, most of my deals were under about $1 million. So every time I did a deal, I was also good friends with Joe Fairless. And he would ask in the beginning, hey, did you raise money for that deal? No, I got this. And in reality, I was just too scared to take other people's money. But Joe got so tired of hounding me where every time I did a deal, he would just mumble, yeah, should have raised for it. And I'm like, hey, take it easy. I got this. I can handle this. And it was just me hiding behind the fact that I was too afraid to raise money. What changed for me was that I saw a bunch of my high net worth friends. They were investing in bars, restaurants, marijuana companies, crypto schemes. And they were doing that mostly for bragging rights. The big ego doctors wanting to say, oh, come to my restaurant, come to my nightclub. It's not your restaurant. It's not your nightclub. You're just a 2% investor. Or they had fear of missing out, right? So they didn't want to miss the train where maybe some of their colleagues were investing in this latest coin offering. And what if they didn't get in and their colleague got rich? So fear of missing out and bragging rights. And I saw these disastrous investments that these guys were putting money in. And then, when we got together, they would complain. So for the first time ever, I felt, okay, if I let these people into my deals, I'd actually be doing them a favor. And that's what changed for me. And that's when I started raising capital, right? It was just close friends. And then, who would have thought we start doing bigger deals when you start raising money? Because I'm no longer lying to myself and pigeonholing myself in that $1 million, $2 million range. So that's been an absolute game changer. But I highly recommend people use their own money for a number of deals before you take on sacred investor capital.
Yeah, I totally agree with that. So when do you think an operator is ready to start taking on other people's money?
It could be a combination of things. If they're just a one-person shop, they need some deals under their belt for experience. And then the deal that they raise for should be similar to the deals that they've done in the past. On the flip side, let's say you find an incredible deal. You should be able to partner with somebody that's very experienced in that asset class, in that area. And then together, it's okay to raise for that deal. But to blindly raise, hoping for the best, is unacceptable.
Yeah, I mean, I think that makes a lot of sense. In my own, a big part of that, I think, is the confidence that you get, because it's not possible to sell a product, especially a really expensive one, if you don't have like faith that you're doing the right thing for the person who's buying it. You hit on that. You were like, I need to get my friends out of these terrible deals they're in, and I happen to have good deals, and I'm doing them a favor. I think that if you do not have that mentality when raising capital for an investment, it's not going to work. So, like you said, building up your own track record, getting that confidence is going to make it not just so you can convince others, but so you can convince yourself.
You said something very important just there. If you don't have the track record, you're not going to be able to confidently sell it. So let's think about that. If you can't talk the talk, when you pitch this deal to investors, sure, some novice investors might contribute. They might, invest in the deal. But if you do a live webinar and there's some savvy people on there, you're getting slaughtered.
Yeah. Yeah. So most operators, I think, struggle with sales, especially if you're not like a professional salesperson and you haven't been doing sales your whole career. I mean, I would say that we all do sales all the time, but how do you think an operator can equip themselves for investor conversations?
I've been teaching this to a group of mastermind people for 5 years, and nobody really pays attention to the capital part because they're always focused on finding a deal. So for any operator out there, you've got to know that if you find a great deal and you don't have investors lined up, you're giving up a fair amount of equity. Whereas if you had put out some newsletters, a lot of social media posts, letting friends and family know, hey, we raise money for our real estate ventures, happy to chat. And you have to do this well before you find the deal, right? If you have a great deal, it's already too late to start raising capital. So always have that mindset. Maybe devote 10% of your time to having conversations with investors or marketing yourself and your company on social media, LinkedIn.
Yeah, that makes a lot of sense. I mean, what you're talking about is kind of qualifying and pre-selling people before they even have the deal. So I imagine you're saying something like, oh, I usually do deals with, X, Y, and Z aspects. My minimum investment is usually around here. If I were to get a great deal, would you be interested? I imagine the conversation goes something like that.
I think whatever you put out there, you just have to be authentic. Social media, LinkedIn, it's gotten so fake, bots, VAs, AI. It doesn't matter. You ghostwriters, yeah. There's people bragging about that. They're literally there's a group on LinkedIn. A guy started a post. He's like, "Hey, just so you know, I got 10,000 followers in the last whatever number of days because I have VAs answering all my comments, answering my DMs, and posting on everyone else's posts, right? Or commenting on everyone else's posts." And I'm like, okay, so if you're faking it, why are you telling the world you're doing that? So that's just a small example because there were so many responses to that. Oh, I do the same thing. Oh, me too. So right now, authenticity wins on social media, right? So whatever it is, just be authentic. Talk about what you're doing and try to add value. Share stories of failure, add some humility, be humble. And that's where people will connect with you. It doesn't matter what they connect with you on, but be authentic. And then you could pitch.
Yeah, I mean, I would go into that a little more just for deals for the audience. You need to talk about your full aspect of your personality because people will find items that they relate to you on. Like it could be like, oh, I'm also a dad, like something that simple. Or I also like to ski. I mean, just little bits like that on your personality that someone connects with you on. And then that's just kind of the hook. And then you bring them into the rest of your message. Just kind of giving it like specific tips on how to be authentic.
Here's a question for you. You are around a lot of capital raisers and you're probably around a lot of deal operators. Do you think they're pretty different personality types?
I think they're extraordinarily different.
Okay.
Personality types is different. I would say what they obsess about all day is totally different. Like I would say the similar thing is that they're both very entrepreneurial types. They both love what they do, except the deal guys I know are just deals, 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 deals all day. Like that's their constant little like mouse on a like spinny thing in their brain is just deals, 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 deals. And then versus capital guys, not making a judgment call here, are just like sales and marketing people who love sales and marketing. I love
Yeah.
sales and marketing. Like I said, I'm the latter of the two. I also love real estate. I think real estate's an incredible financial asset. Where I cross with these guys is like a love of finance, usually. But yeah, did that answer your question?
It does, but then a point to our audience, it's really a lot to ask for one person to do all of the deals and the operations as well as capital raising. Maybe
Yeah,
in your first couple deals, you have to. You can't afford to hire a team, but maybe partner with a capital raiser who really believes and knows what you're doing. And yeah, because again, I see a lot with the folks that I mentor is they're rarely both. They're usually
yeah.
one or the other. Yeah, so
I,
good point.
usually one or the other. There are a few I can think of that are both, and those guys are just like wildly successful.
Yeah. Yep.
Yeah, but that it's a very rare trait. I mean, I used to be in the startup world, and it was the same thing, where it was like either you can sell or you can code. But if you could do both, those were the guys that were just like unstoppable.
You're unstoppable. Yeah.
Yeah. So you mentioned before the show that being an outlier is like one of the most important things. Like, could you, in terms of being successful in capital raising, so can you unpack that? Like, what do you mean by that?
Anytime you play in a crowded field, you've got to do something to set yourself apart. So for multifamily, for example, maybe 2014, 15, 16, there weren't a lot of operators. You could be a pioneer, get into that industry. Today, everything has become commoditized. The underwriting is the same. The offers all are very close to each other.
Yeah, some they're all 20 IRR,
Yeah,
all of them.
yeah, right. There's that. And then operations are all the same. I've interviewed so many apartment operators for this podcast. And one of the best pieces of advice that somebody shared was if you are looking for a partner in your multifamily business, do not hire a visionary, hire an integrator because there's nothing to reinvent. The wheel's already out there, right? So, an outlier for us is we focus on non-residential commercial. There's not a lot of us out there relative to the other asset types that are out there.
I would say specifically in like the online real estate media space. That's true.
Correct. And then each one of our deals is completely different. And then be an outlier in everything from making an offer. There was a lady whose husband had passed away, and they had this large commercial estate in Ohio near a college town. And this lady was selling the entire estate. This estate included a hotel, apartments, retail, a B-dubs, just tons of different office space as well. And they did a call for offers. We were told there's a local development company that was probably going to get the deal. And we thought, okay, there's got to be a better way. So we dug deep into her and her previous husband's past, found out they had an endowment set up to the university. That university was near and dear to their heart. So I called the heads of the accounting, marketing, and hospitality departments and said, hey, if we buy this property, can we get your help managing the hotel, doing the books, helping lease up vacancies? And in my offer, I put that I contacted the university. The students are going to help us run and manage this property. And this call for offers had 2 more weeks. This lady called the agent and said, hey, stop the call to offers. We're selling to this person. So be an outlier.
Yeah.
Right. Always distinguish yourself from the rest of the pack.
Well, I think you're totally correct because you get into any space that's worth being in and it's usually very crowded. And you just gave an example of being on the acquisition side and like really having to differentiate yourself as opposed to like, oh, we're willing to pay you, 1% more than the last guy, or we can close fast. Like something like that. Every offer says that, more or less. And so you went with like a completely different angle there. So how do you apply that to capital raising now?
Again, I'm pretty authentic in all of my posts. So I call out a lot of people. Capital raising has become very easy to get into, right? There's a very low barrier to entry. What little I know about it, I know you can sign up for one of these fund platforms. You pay less than $20,000.
Way less.
And within 30 to 45 days, you are a capital raiser. No exams to pass, nothing, right? I think they might do a background check and that's about it. So a lot of people have gotten into capital raising. And then you see these LinkedIn posts where it's like, hey, I just travel the world, retired early,
Financial
home,
freedom.
yeah, financial freedom, right? And
Yep.
people are buying this and they're intrigued by it. And I've met a lot of these people that are posting this nonsense, and they're so full of shit. None of it's reality, right? So I don't individually call people out, but I've called out. I'm from Jersey, so I speak my mind. I'm pretty direct. I've called out capital raisers. I've called out life insurance companies. I call out all kinds of stuff, right? So whatever thought comes to my mind when I'm posting is what gets written.
That's what we used to
So
say is thought to tweet. Thought to
yeah,
tweet.
yeah.
That's how you post. Yeah.
I've never had a VA. No one's allowed to answer any of my posts, comments, DMs. It's all me. It's authentic, and I think people resonate to that, right? No one else is doing it. LinkedIn has become such a neutered platform where it's all positive. Look at me. Here's an
I know.
important lesson I learned. Had lunch with a billionaire the other day. Here's the 5 lessons that I learned.
Yeah.
It's
Yeah.
it's just it's so stupid. I'm just like, hey, here's a complete bullshit. Take a look at this.
You know,
So be different.
I would say the other side of that though. So I'm a Twitter guy. I've mentioned on the show a few times, now known as X, whatever you want to call it. And that everyone on Twitter, I think without a doubt, Twitter is a lot more authentic of an experience. Like very negative, for example, not very positive. But the people on Twitter say, like, do not overlook LinkedIn. I know none of you guys like it over there, but that there's still tremendous opportunity on the platform. And that they said, like, way easier to get traction on LinkedIn than on Twitter. I mean, though you do have to, we're not going to go too hard into bashing LinkedIn. You got to put up with like the crowd that you're with and like what the general tone is. So I would just say, like, don't ignore it. Like, it's still a tremendous opportunity.
I don't. I feel free to follow me on LinkedIn, but I feel like I'm somewhat of an outlier. Every so often, if we're raising for a deal or if I have a pitch deck, it's the typical neutered post, right? But yes, be authentic. I was shocked at how many investors that we got on our last deal who said, "Hey, I've been following you on LinkedIn for a while. Love your post. Here's 50 grand. Here's 100 grand."
Mm-hmm.
So it
No, that's
works.
totally how it goes. Like our shop runs off a local podcast, actually. Like that was our niche. Just saying we're all about Colorado real estate. And my partner, Chris Lopez, has been running that podcast for like 5 years. And it's very much the same. We get like soft commit, notification in Slack, $150,000. Who is this guy? And then we call them and they're like, oh, I love Chris.
Nice.
Yeah.
Good. Yeah.
Yeah.
You got to put yourself out there. People have to get to know you, right?
Yeah. Yeah. So you have a podcast as well. In fact, like a really successful podcast. How does that fit into your strategy?
So it's not my podcast. It's Joe Fairless's Best Ever podcast.
Okay.
He started it, he did the first 2,000 episodes and then he brought me on as one of the hosts. I don't know. I don't try to capitalize on that. I don't try to promote myself on that. It's Joe's
Same here.
podcast.
Yeah.
So, I'm sure it's gotten my name out there a lot, but I try to go out of my way to not promote me and promote the podcast.
No, I think
But
that's good.
over time, right? I'm sure I've done hundreds of episodes. People get to know you. So when I go to his conference, the Best Ever conference, people know me because they've listened to my podcast or they've listened to his podcast, my voice. So I'm sure it helps a lot with name recognition.
Yeah. Or somebody finds out about you through a LinkedIn post or something like that. Then they see some more of your posts, see that you have a podcast. And then, like you said, the role of the podcast is get to know you.
Right.
So on the marketing side here, I'll go into that a little more. The way the human brain works is that if you hear someone talk and spend time with them, you start to like them. That's just how human psychology works. And that, when you hear someone in your ear for hours and hours and hours, you develop a relationship with them. That's just the way it is.
I would beg to differ, and I'll tell you why. Because when I first started doing the podcast, one, I absolutely sucked. But after, maybe a couple of years, I got a little better. I would play it in the car, and my family was like, "We are not listening to this. We don't want to hear you anymore. Like, stop." I'm jokingly saying that, but my family did not want to hear my voice in the car.
Yeah, I would say on my side right now, I've been hosting Unlimited Capital on the Best Ever CRE network for 3 weeks, and I've gotten a comment from my best friend and my mom They love the show.
Good, good. It's
Yeah,
it's actually, it was a hell of a gift being able to host an
truly.
episode on this podcast. So I've always been very grateful for that opportunity, and I'm sure it's done wonders to put me on the map.
Yeah. Yeah. So let's go a little bit into, I think your unique angle, and I think you'd agree, is that you're not in the multifamily crowd. And
And
so how do you,
I'm vocal about it.
no,
But go ahead.
exactly. Yeah. So again, I'll get a little technical here. So the way that people get into real estate, in my opinion, having been raising I've raised about like $75 million over the past 3 years, along with my partner, Chris, is they come in first at a real estate level. Well, number one, you don't have to convince people that real estate is a good investment. That's a really big benefit of our product, is that that's just like a cultural um, belief. In fact, it's a cross-cultural belief. Like I've lived overseas for 8 years. Everybody in the world, one of the things that attracted me to this business was that I was like, oh, I've been all over the world and talked to all these people, and everybody wants to buy real estate. Great product. However, very complicated product. And for example, before I bought my first rental, I spent like 3 years studying, until I was ready to pull the trigger on a couple townhomes. You go deeper and deeper. So that's the awareness stage. You start your education, and then you get into the consideration stage, which is mid funnel, or, awareness, interest, decision, action. So you're in the decision stage. That is where someone is the hottest, and that is where they meet the voice that isn't unique, or the voice that is unique. Excuse me. Obviously, that's what I was trying to say. So, you know, I think you can take it from here in terms of like how you use the fact that you're so vocal about like not being a multifamily guy, when of course the overwhelming majority of voices on LinkedIn or any other platform are like trying to sell you multifamily.
Yeah. And just to be clear, I'm not anti multifamily. I'm more
Sure.
pro high returns, right? And I've invested
Love it.
passively in a lot of multifamily. I've owned apartments and operated them before, but that's when they were making a lot of money, right? And when they became commoditized, and I blame Fairless for a lot of this because he wrote a 400-page Bible on multifamily where he gave away all his secrets, and people literally have read his book and have become multifamily syndicators. And again, because of that, it has become commoditized. It's become very easy to get into that and become a multifamily operator. So again, I'm pro high returns, but I will bash multifamily because I see people pitching their deals, and my LinkedIn post yesterday just said year over year rents are down whatever percent, and then we've had 23 quarters of declining rent in multifamily. Like it's a bloodbath out there, right?
It's
Deals
like
are
almost worse than the Great Financial Crisis in terms of
it's
rental quality.
actually the worst decline since the Great Financial Crisis.
Yeah.
But people don't know that. They're on LinkedIn and they're seeing, oh my God, 15-20% IRR. I'm posting, hey, this is a bunch of BS. Like, here's a reality of it. And oh yeah, come invest in our deals. Not in the same post, but maybe sometimes. I'm just telling it like it is. And I'm calling out people that need to be called out.
Well, and it's not just that, is that by the time someone reads your post and can understand it, they've already gone very far down the journey to deciding they want to invest. So you're actually capturing them. Like it's way better than capturing their attention about real estate in general, because you don't know if this person is accredited. But by the time they can understand and hear an argument about like asset classes and whether they're crowded and everything else like that, they are very sophisticated, very engaged, very close to investing. And so you're able to catch them like at the perfect time. I mean, that's why AdWords is so expensive, is because if you type in like buy new skis, like you're probably ready to buy some skis.
Yeah, that's a great point. And what I also realized is I failed in not capturing anybody outside of that market. So I get it where I'm targeting people that are existing real estate investors, people that might have gotten jaded by a couple of bad multifamily investments. But, Richard, where I failed was I have a neighbor at our lake house where I've known him for almost 15 years, and he was in a bad multifamily deal. And I'm like, he's like, what should I do to get ahead? Like, what are good investments out there? And I'm like, that we do this, right? He's like, wait, what do you do? I'm like, no, you wait. What do you think it is that I do? He's
Yeah.
like, you just buy some buildings and you teach people how to do the same. I'm like, that's it? That's what you thought I did? He's like, yeah. I'm like, all the marketing material that you have, the koozies, the cups that you have, like you never Google the website that's on these cups. So I had to explain to him, yes, we allow friends and family into our deals. He's like, I had no idea. What an epic failure on my part
Yeah.
that the people closest to me have no idea what I do.
Well, I
Shame
think
on me.
that also gets to like what I think the core mechanism of selling products is that not enough people know about your stuff. Like, and that is the main goal at all times, because that is the one thing that you can increase. Like, assuming you have a product that isn't terrible, the more people that know about it, the more people they're going to buy. And so therefore, like, spreading awareness, whether it's the people closest to you or really anybody hearing about what you do and how you can help them, like, is your job. Like, that is
I,
the job. It gets a lot more complicated from there into strategies and tactics and stuff, but the job is like letting people know about your stuff.
I feel like you and I should partner up.
I love it.
We'd
No,
be
I've
unstoppable.
yeah. Pause the podcast. Excuse me. No, just kidding. Um, yeah.
Yeah.
So
Shows
go
how
ahead.
little I know about really capital raising.
Oh, well, I appreciate that. I'm very humbled, sir. So how do you let's get into like the mechanics of how you differentiate an offer when it comes to um like when you're pitching the deal, because like you said, it's very true, and we really struggled to for lack of a better word, sell multifamily at this point in time. And I think that a big part of it is, like you said, is that like every deal is 20 IRR. Every deal is the same. Like, look at all these markets. And that just people hear it, goes one ear, goes out the other. But when we have a highly differentiated product, it goes a lot better. And so where do you, and of course, this also goes into you being an outlier and you saying like everything's got to be different. So when you describe a deal, like, is it just top to bottom? This is why this is different than everything else.
No, we make our deals different. So,
Oh, I love that.
one, the other thing that I think should jade people on multifamily is now everyone's doing 10-year holds or more, which is the dumbest thing ever. They call it fancy marketing, the generational fund.
Oh
Like
yeah, I love
your
that.
kids can make money off this when
Yeah.
you pass. Well, look, that's really stupid because you can outrun any bad real estate deal over
Good
10
time.
years.
Yeah.
Like you should be able to return your investors' capital in 5 years or less, just like the old days. What's changed now? The deals are thinner, so you're keeping their money longer. Not okay, right?
Well,
And there's no liquidity. Like if you want to cash out in year 6, good luck.
yeah. I mean, I think a lot of the reason that the deals are thin is because it's crowded. Like that's how
Yes.
crowded trades work. Is people pile in, there's more demand than supply, asset prices go up, and yields come down at the exact same time because these things are related.
Yeah. So, sorry, you asked about how we do deals differently, right?
Yeah.
Every one of our deals is different. There's no two that have been the similar structure. We had a deal where we offered our investors an 18% preferred return
Damn.
and then a 30-70 split, meaning they get 30, we get 70 upon sale. So we double their money in 3.4 years. But this I thought was, come out swinging, give everyone a middle finger. It actually backfired because everyone thought we're full of it. They thought there's no way, too good to be true. The rest of the industry is offering 8%. You're offering 18%. So you know what I did after that is at the 1 year mark, I bumped up their pref from 18 to 22% and I backdated it to year 1. So here I am, like still trying to prove, guys, our deals are way different. So maybe you should take notice. And again, everyone just thought complete scam until we sold. And even then, we just closed that deal a couple months ago. I don't think that worked in our favor because people just thought it was stupid or too good to be true, scam, whatever. But that was a win-win for all of us. The latest deal that we just raised on, we're offering a 60-40 split. 60% goes to the GPs, 40% goes to the LPs, right? But we bought 16 buildings that are condoized. We bought them for $3.5 million, or roughly $220,000 per building. And all we're doing, holding it for a year so we get capital gains and selling off buildings individually. A very simple thesis: the sum of the parts is worth more than the whole.
Yeah.
Right. And that's, but again, our investors were jaded because some of them were like, Well, dude, I don't do anything under 70/30, meaning the LPs get 70. And I'm like, you understand our last deal, we offered investors 30 and they killed it. He's like, yeah, it's just a line in the sand. I need at least 70% for the LPs. So again, we're fighting some ingrained behavior and they don't understand why they're only getting 40%. Well, because the returns are going to be astronomical, right? So I'm fighting bad behavior that have created bad habits.
Yeah. I have a question. How much does so you obviously have a relationship with a lot of your LPs. I mean, that's how this business works, is a lot of repeat investments, deep relationships, everything like that. How does your investors' appetite inform the deals you select, or does it?
That's a great question. Let me think about that. We've got a handful of investors that will blindly put in money into
Sure.
any deal that we do. After raising for this office deal, I've realized that investor sentiment towards office is not very good. We're as bullish as can be on office, but we understand that investors are not there, right? So for that reason, I would say over 60% of the deals that we do, we don't raise capital for.
Oh,
If there's too much risk or there's some level of uncertainty, we will not put investors in the deal. We'll just do it ourselves, right?
or if it's too complicated to explain or something like that, like too
Correct.
too exotic.
Yeah, like development deals, for example, there's no money for a year and a half. So we won't get investors in on that. If anything, we'll do a debt deal for them where they just get 10%.
Yeah. I think that's a great nugget right there. Is if the cash is pushed out, consider a debt or debt like offering that like generates some kind of income, and a little more security.
And sorry, the reason we do our own deals if they're risky is I never want to stop being able to say we've never
Yeah.
lost investor capital, we've never paused distributions, and we've never not given investors what we've promised.
Oh, without a doubt. Yeah. I think related to this, I ask this almost every show, is how have you seen investor appetite change over the past few years in terms of like what parameters they want from a deal, how much risk they're able to take, whether they want their return pulled forward.
Yeah, I think they're looking for diversification. I think it's for a couple reasons. One, obviously, multifamily deals have not done very well lately. And this isn't the fault of most operators, right? There's some phenomenal operators out there. And for whatever reason, they're having capital calls or the deals imploded. But, I think a lot of them unfairly get blamed. When your Apple stock goes down, do you call and bitch out your stockbroker? No, you understand that stocks are cyclical, they go up and down. But real estate investors have been so spoiled because the arrow kept going up and to the right. And we've become jaded when a deal doesn't go well, right? So again, I'm not blaming all multifamily operators. It happens. But for the last 2 years, at least, people have been looking at different asset classes and they've put a lot of money into RV parks, car washes, self storage, but all of those have become commoditized. And for the first time, I would say in the last year, there's been a lot of focus on retail. I wish there was more on office because we have a once in a lifetime opportunity to buy office for pennies on the dollar.
Yeah, literally pennies. But
Yeah.
not an exaggeration.
But a lot of people are now interested in retail. There's a lot of marketing about grocery anchored retail. It's good, right? I think people are also fearful that stocks are near their all time highs. How much more room is there? How much longer can this bull run keep going? It's the longest one in history.
By
So
far.
people are hedging their bets. And what I've also found is nobody likes keeping money in their pocket or in the bank or in a savings account, right? It's just, it burns a hole through their pocket. People are like, gosh, I've got this much money. What do I do? Keep it, chill, like wait for a correction, then go all in.
Yeah.
And people are not comfortable doing that because of fear of missing out.
How much of a correction do you think we're in right now in real estate? Because I mean, we're clearly in a correction, but I mean, you're kind of implying still not the right time to buy for a lot of asset classes.
So I think it's asset class by asset class. Retail is not in a correction. It's almost at a 20-year high. right?
Just
The
by cap
lowest,
rate basis?
um, well, by valuation, vacancy is the lowest it's been in 20 years. Obviously, caps have decompressed because interest rates have. Industrial is getting overheated.
Mhm.
Office is just an incredible opportunity. Multifamily prices keep going down. Self storage is declining heavily, right? And it's the whole self storage market's crazy because when you're underwriting a deal, whoever your existing clients are that are paying for the units are going to be your highest paying customers. Everything that you get from then on, the new people are going to be paying less. Why would anybody buy something that has declining rents?
Mhm.
So storage is going down. Um, you know, I don't have a great gauge on investor sentiment, but it's just based on our last capital raise. They're looking for diversification. They really like the track record of never having lost money
Mhm.
and being around for 15 years.
Yeah. Have you noticed an increased preference for day one cash flow?
Yes, people want. We were asked a lot, how often are distributions? And I see a lot of other people doing monthly distributions. And that seems to be really appealing, right?
Mhm.
Uh, Historically, we've done biannual distributions and they were fine. But now we've got to pay out more often. And I think part of that is every quarter or every month the investor gets their check, they know, okay, good. No pause distributions. We're still good,
Yeah.
right? They're
Yeah.
little PTSD.
No, without a doubt. Um, I also think that it gives people some peace of mind. Like you said, I guess you're kind of getting into that of like, hey, if they're paying me out, then it clearly isn't a catastrophe. Or at least that's the assumption. Clearly there are cases where you can overcapitalize or all these
Yeah.
bad reasons, but I think people have the assumption that if they come into a deal and they're able to clip a coupon, that probably there's debt coverage. Probably things aren't going that bad. And I think that they assume that it's a like lower risk deal than something that's like, hey, we gotta wait 2 years. I mean, that's just been from our point of view is that like distributions now and income massively in favor. Anything that does not produce that is just going to be more difficult to sell. I'm not going to say it's a bad deal. I'm not making a judgment call if those are your deals. I'm just saying it's a lot harder to move right now, in my opinion.
Yeah. This is probably the toughest time to pitch deals to investors, except the new investors, right? Uh, but from our experience, I would say 90% or more of the people in our latest deal have been in real estate investments before.
Mhm.
If not 100. I don't know that there's many newbies in our latest deal.
Yeah, I mean that would also make sense because of the type of arguments and what you're putting out in your content.
Yeah,
Like if
good
you put
point.
out very sophisticated arguments, you attract very sophisticated people. And I guess there's one type of operator who's like, no, okay, I don't want to go too far an example, but they could perhaps want to attract someone who's a newbie. But for us and for yourself, like you want to attract a more sophisticated person because you have a more sophisticated product that will appeal to them. And also a more sophisticated person probably has money.
Correct. Good points. Yes. But again, I need to do better with just putting my message out there to all audiences.
Yeah. I'll give you another like thing where this comes from. So first of all, I have to credit Alex Hormozy. He's the guy who's really like made this abundantly clear for me. And like those were his exact words are like more people got to know about your stuff and that's the job. Is the other thing that you can actually usually increase by 100x with a small change. Like it's impossible to 100x conversions with one change. Or I guess it's like hypothetically possible, but like that's not going to happen. However, like the difference between a good LinkedIn post and a great LinkedIn post is 100 times more impressions. Like if I go into my like LinkedIn feed and it tells you how much impressions. I wrote one about AI taking software engineers jobs and that Mark Benioff of Salesforce said that they weren't hiring any more developers because they didn't need to. And needless to say, that was a highly controversial statement and that I had a really good hook on it. And that thing was like my usual LinkedIn post. Like I'm not a poster on LinkedIn. I'll say for the record. Um, my usual LinkedIn post gets like 100 impressions. That one got like 30,000.
Good for
And like,
you.
look
Yeah.
at that lift though. I mean, sorry, I'm terrible at math too, but that's like 1,000 times more reach. Like you can do that on the top of funnel. Like it's a lot easier to 100x 200x, 1000x on like who sees your stuff than it is at any other part of the funnel. You know, like you're not going to 100x your conversions. It's just like not going to happen.
My takeaway from that example was stop solely focusing on real estate people.
Yeah.
Right. What a great way to attract tech people or people from different industries. I love that.
Yeah. Yeah. Okay. So let's switch to, kind of getting towards the end here. Like, what are some lessons for other operators that are, say, like who you were many years ago and have been doing deals with their own capital, and whether for running out of capital or because they're ready to accelerate or they're ready to like take on larger deals that they don't have the capital for? Like, what is their like 30, 60, 90, 1 year plan of like, what do they need to start doing today?
First, become comfortable with the fact that if you have mastered your craft, you have earned the right to take on other people's other people's money towards your investments. So again, 50% of the people I speak with don't ever want to raise capital. They're too scared, like I was for 10 years. So again, if you have mastered your craft, you've earned the right to take on investors. Two, get mentors along the way, right? There's other people that have paved the way. They've made every mistake you're about to make. Let them help you. Be open to taking on help. And honestly, I don't know, especially this conversation reinforced the fact that if you're a great operator, you might not necessarily be a great capital raiser. So
Or have the
if you're
time for
not,
it even.
yeah, align yourself with the right resources to help you raise capital. Because if you find that killer deal and you've done nothing to get investors or get capital lined up, you're giving up a lot of equity to get this deal done. And then you'll realize, hey, maybe I should have planned for this stuff ahead of time. And raising capital or thinking about raising capital when you have the deal, it's already too late.
Yeah.
It's got to be done ahead of time.
So how much do you think that let's assume that it's someone who is a solo operator? How much time should they balance between the two? Like running their existing assets or looking for deals? Let's put that in category 1, which is operating. And then how much time should they put into category 2, would you say, at a minimum, to be successful or get the kind of results that they're going to need?
Okay, great question. Let's say between 30 and 40% of their social media posts should be geared towards capital raising. The other percentage should be towards finding deals, getting partners, and exposing yourself to the rest of the real estate community. In terms of phase 2, I think you first just realize if this is something that you really enjoy doing. Don't do it because it's an obligation. If you don't love talking to investors and putting yourself out there, it's never going to work, right? I'm the guy where if I'm going on a road trip, I'll post on LinkedIn, hey, I've got 6 hours in the car. Let's talk. I'll take anybody's call, like book a call. If you're not that person, don't try to be a capital raiser. Know your limitations and align yourself with a resource that can help you raise capital. You've got to love it, right? You've got to love educating people, hearing about them, finding out what you can do to help and empower them.
Mm-hmm.
You've got to love that or it's not going to work.
I totally agree with that. And every time you say something, I want to like dive into the marketing angle because that's just how my brain works. So something he just said was about learning why the investors want to invest and what their goals are. Because the way this works is that you don't tell them you want to invest in my deal because of X, Y, and Z. What they tell you is, I like investing in deals that have X, Y, Z. Here's why I want to do them. And then that's them essentially like creating a contract between the two of you. I'm using the term very loosely, saying, I will buy deals that look like this, and here's why. Like that is the key of starting sales calls and starting sales relationships, is learning why the prospect is talking to you, why they want to talk to you, why they're interested in making the purchase in the first place, and going like, why? Like, why do you want income? I want financial freedom. What does financial freedom mean to you? It means X, Y, and Z. Why is that important to you? And then like, it literally gets them saying like, I really love real estate. I love it. Like, I think it's the greatest thing in the world. And therefore, when you make the offer, like, goes over dramatically better than you getting on a call with a new investor and just being like, here's me, here's my deals, here's this and this, here's a picture of my kids, here's where I went to college, here's every single deal I ever did. Yada, 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 yada. No, that is not how it's supposed to go. It's supposed to be 30% you talking, 70% them explaining to you why they want to buy.
Two things real quick to piggyback on that. One, no matter who I have a call with, whether I set it up or I received a Calendly notification, myself, somebody on my team, or ChatGPT, we will deep dive as much as we can into that person to learn as much as we can about them, right? So anybody that's listening to this, anytime you have a call, go out of your way to research everything about that person, learn about them. Two, question for you. Am I wrong in saying that we never sell deals, we just simply present them?
Yeah.
Like, I never push a deal. I say, hey, here's what we're working on. Let me know if you're interested. Am I doing that wrong?
Yes.
Oh, damn.
Yeah. Yeah. I would say that if you make direct calls to action, you will get much higher pull through, like without a doubt. And I would say, so what people are usually afraid of is if I sell too hard, then people are going to unsubscribe. Like if I send too many emails about this deal, people are going to unsubscribe. If they're unsubscribing in your list, like they're not your customer. And so it is not a loss to anyone. You're both better off with that person off your list. And I would say number two, when you make direct calls to action, and I'm not saying like you need to buy now 100K, but like book a call if you want to talk. Come watch this webinar. I think this deal is great. You know, this deal is closing out. Like you will close more deals. I can tell you that I don't know if you're telling me I avoid direct response type things and pushing hard. Now, of course, like don't go over the top. Like we're not pushy. Like if someone gets on a call and they're just like, I'm not interested, we are not fighting for the sale. Without a doubt. Like we don't fight for the sale on the call. That's for sure. But we do need more phone calls, you know? And then, so there, I would say in a sales call, I don't fight for the sale. That's for sure. But in my marketing message, in terms of like trying to drive either more attendance to a webinar or more people to book a call or more people to watch like the follow-on content in our funnel, like, okay, webinar 1 is the offer presentation. Webinar 2 is the financial model. I work very hard to make people watch these things. And it makes a big difference when we do that. I don't know. Did that, like, what do you think of what I just said?
That was a kick in the ass. I've got to do better.
Like, it just works. Like, so yeah, I mean, I think this has been a great interview. It's been a true pleasure talking to you. Like I said, this is the first like proper operator I've spoken to and not, I mean, on this show. I think that this is great for you guys, best ever listeners, because I know that the majority of you listening, or at least I feel that way, are not like the professional sales and marketing people today. They are the operators. And the reason that you're even like still listening to the show is you want to learn how to raise capital. But I think you're so much better off hearing it coming from Ash, especially because the one thing that I really resonated on with you was like, you got to have self-confidence. And if you do not have that self-confidence and you do not feel like you're doing the right thing and like, knowing that you're doing someone a favor, letting them into your deal, you will not succeed. Like getting that mindset right is absolutely step one. And then number two, it's just the biggest change you can make today is just letting more people know what you do and you will raise more capital. And then from then on, you can start, you know, listening to my little rants about tactics and strategy and everything else like that. But that like there's day one stuff. If you let more people know about your deals, you will raise more capital. And if you are confident in yourself and have the mindset that you are like doing the right thing and helping people get into great investments, you will be more successful. So those are like the first two steps. So any parting thoughts, Ash?
Yeah, I get what you said, but I'm still calling you next time we raise capital. We're just going to partner on the deals.
Yeah. No, I would absolutely love to. I mean, or if anything, we can just like kind of chat a lot more tactically. That would be fun too. Maybe even record it.
Yeah. So, what a fun conversation. So thank you so much for your time.
Yeah. Thank you, Ash.